Hi moguls, welcome to the show. Thanks for tuning in. Today we have a special guest on our show, Ken Bahn. He's an investor and entrepreneur with an IQ of 160, which is genius territory, moguls, like Einstein, even higher than Einstein. Ken has a trading system that he will be offering our listeners today. His father, Chandler Bahn, was recognized in Who's Who in the world, as well as Who's Who in the East, and Merit Achievement for his engineering achievements and energy savings. Ken is an actor you may know from The Young Americans on the WB Network, and he plays a doctor in the movie Good Doctor with Orlando Bloom. Let's give a warm welcome to Ken. He's an actor, investor, and entrepreneur, and we're happy to have him on our show. Welcome, Ken.
It's great to be here. Hi, Mogul. Let's all get this together. I'm excited.
Great, thanks so much. So moguls, we have a treat for you this Thanksgiving. Ken is going to tell us how he started with only $600, and that's most of us. So with $600 in futures, he turned it into $7,000. Ken, can you tell our listeners and future moguls about commodities? And also moguls, he's going to tell us how he doubled his stock account from $10,000 to $20,000.
Yeah, that is one of the things that really made me excited. The great thing about investing, whether you're trading commodities, which if you're trading commodities called futures, it's just the term that's in the business. Trading stocks or trading futures, you can paper trade them, which many of you know about, where you just pretend you buy it and you pretend you sell it, and you see how much money you make. So I was paper trading with a $600 account, and I was showing profits of $1,800, $2,000. It got to the point where I was like, oh my God, I've got to put my money in the market. And my first trade, I started with $600. I bought a natural gas call option, specifically, I think it was a December natural gas $3 call or something like that. And the futures, you pay a month, you pay the futures or commodity, and then you have the strike price. So it was a December natural gas $3 call option. Call option means you want it to go up. And this is a very simple trade. It was natural gas in the wintertime, and in the U.S., people turn on their heaters, their gas heaters, and the price went up. This was back in 1996, 1997, and the price went up. My option, I bought it for $570. I had to take that extra $30 to pay a commission. Commissions were expensive. This was all over the phone. The internet didn't exist. And the option quickly went from about $600 in value down to about $300, went all the way down to $150. I felt sick about it. Until it came back up to $400, $500, $600, it hit $800, and I sold it. I made $200, and I was just thankful I didn't lose my money, and I realized I kind of threw my money in the market. So I took that $800, $50 went to a commission, 75 or 750 went back into the market, and I did low. And the market eventually picked up my order, and the very day I got filled, the order settled at $920. So something I bought for $800 was already $920. It quickly went to over 1,000, 1,800. It went up to about 3,200. It dropped back down to 1,500. I felt like, oh, I missed it. But I was like, it's winter, it's still getting colder, and the prices went up. It went to about $3,000 in value, $4,000 in value, $5,000 in value, and I thought, that's good. Right?
Oh my gosh.
Yeah, I put my order in to sell it at 500, which was, you multiply it by 10, so it's worth 5,000. And the market was moving so fast, so quickly the next day, the law would say, give me 500 or better to close the position. So they actually got me a better price. They got me 72 or 720, which made the option over $7,000. $70,000. It was worth $7,400. So it went from an account, and that was in a month. And the previous trade was in a month. So in about 2-3 months' time, I took a $600 account and turned it into a $7,000 account, and I've been hooked on investing since.
Oh, that's amazing. Oh, wow. Listeners, did you hear that? So, you know, you can go to Ken for your futures and commodities. And Ken, what about now? You said that you are doing, you doubled your account from 10,000 to 20,000. That's in the stock market on this one, right?
Yes. I was trading futures. I actually don't recommend. It's very tricky. You have to really, I mean, you guys got to go down that rabbit hole, and there's a lot of risk involved. So I actually don't recommend trading futures to most people. If you want to do it, you know, but the stock market, I was trading futures earlier this year when crude oil was falling. Crude oil fell this year from like $70 a barrel all the way to $6 a barrel. And during the pandemic, it just fell down, and it was super easy to trade. You went short, and if you're new to investing, you might not know you can short virtually any market, which really is an eye opener. You know, investing is like a blank canvas, and you can paint by numbers, or you can be Michelangelo or Andy Warhol or Kandinsky and create a masterpiece.
I like that.
People use this investing thing kind of loosely, but I mean, to me, it's like an artful trader where you're buying and selling according to what the market's doing, not necessarily your you know, idea of what your life wants to be. You can really see, there's simply a possibility. So, anyways, back to crude oil. The crude oil market was falling very deep. Once it hit the bottom, it started coming back up. It was difficult to predict where the prices would go. Are they going to come all the way back up? Are they going to jiggle up and down a little bit, which they're doing now? And I started seeing less profit. And a colleague of mine was doing very well with Tesla stock. I think everyone's heard of Tesla stock.
Yeah, and they're getting into S&P 500 finally, right? So that's good news.
Yeah, that's just announced. And my software goes, has stocks. So I said, let me just flip over and look at the stock chart. And I trade on charts and patterns. And the chart of Tesla is phenomenal. I was like, the thing is going straight up. And I said, well, if I don't get the crude oil, if I don't get my profits up in crude oil, I'm gonna try. I'll just go and try Tesla stock. And then I went back to crude oil. I did 5 trades. They were all quick. Made like $200 on maybe 20 minutes. And then I was like, you know what? I'm just gonna do it now because I get the math in my head. I was like, I'm gonna try the stock. So I moved over and I tried Tesla stock. My first stock trade. I think I bought 8 shares or something like that, maybe 8 shares, and I made $600 in about 6 days. I held the position. And
nice.
I was like, I was happy with that. I said that was easy and it was less stressful than a futures trade. And that's the key to stocks. Stocks are much less stressed and they're just a safer situation because due to inflation, all stocks are supposed to go up. So at least you kind of know the direction that they're supposed to go. They don't always go up. Sometimes they plummet. But when they plummet, that's when you actually want to buy it. So I started trading Tesla stock, and I started making a lot of money. And the stock had a stock split. I made a lot of money on that. I just look at my little list of Tesla trades here. There's one for $750. It lasts $750. Lasted 3 hours and 5 minutes. This was just over 2 days. Made about $1,200. Another one just over 2 days made $900. Another one just over 3 days made about $1,000. This one's $637, but it's only 3 hours and 9 minutes. And after having years and years of investment experience, a lot of people say buy and hold. I'm more of a day trader where soon as I see profit, I like to take them because sooner or later the market's going to take those profits back. But the market goes up and down, and even if the stock goes up, other investors will sell, and they will take profits, and that will make the market plummet. So once people start taking profits and they realize the stock is overvalued, it plummets. But anyways, I did well with Tesla. However, I didn't double my money. I think that it's hard for people doubling their money in the stock market, right?
Yeah.
Yeah, I wanted to experience that.
Oh my gosh, we all want to experience this. Tell us, please. How did you do it?
Well, I kind of reverse engineered it. I said, how do you do that? And I realized with Tesla stock is, after the stock split, the stock is about $490 right now, $500. Easy numbers. You can't buy, you need a lot of money if you want to buy like 500 shares, 4,000 shares of Tesla. You need a lot of money. So it's better to find a cheaper stock that is really for a large move. And the software that I use, Speaker Ken, you can set it so it shows you the top 10 of the NASDAQ, the top 10 of the NICE, and it shows you all the top 10 lists. So I keep that on, and I see this company is up $35, and the stock price is $54.
What stock was that, Ken?
It's called Piedmont Lithium, PLL, and it's a tiny company that makes batteries, but they just got a deal where they're making batteries for Tesla cars for the next 5 years. And it was announced, I think, the end of September, beginning of October, and the stock just shot up. It was at $10 on Monday, and by Thursday, it was at $54.
Nice. And you found that on Thinkorswim, because we like to tell our moguls like good platforms that help them in investment. So Thinkorswim, it's a very good platform for investors to look at stocks.
It's by TD Ameritrade, Thinkorswim. It is the best ever. It is the best ever. I cannot say more nice things about it. I can't believe it does all the stuff that it does. And I really wouldn't want to trade on any other platform because it's designed by investors, so they mold the program to the investors. And every time I've had an issue with it, I've called them and I said blah blah blah, and they say, hey, do this, boom, and then it's like a custom bus will appear on my software exactly what I want to do. I was like, so cool. So I've learned that whatever I want to do with it, it can actually do it for me. If I don't know, if I can't figure it out, I can call to it. So it's free. Anyway, going back to Piedmont Lithium, and the stock went from $10 to $54. Now I missed it, but I was like, that could have doubled my money. That could have tripled my money. I could have quadrupled my money on it. But it made 5 cents from it. So I said, let me watch this stock because they might do it again. What happens is stocks pop. They go up, people start buying it, and it overvalues the price, and then people make money, and then they start selling their position, and it starts to come down, and everyone bails out, and then they flop to the ground. But sometimes, with the big news items, they do it again. And then they might even do it a third time, but it's like not as much. So I was like, maybe the stock will pop again, and I started watching it. My first Piedmont Lithium trade, I bought, it's right there on my desk, I bought, 500 shares at $24, sold 500 shares at $26, made about a little over $1,000. I said, okay, this is good. Now, with a little company, the stock being only $25, I could buy a lot of shares. And that's, controlling 500 shares of any stock. That stock goes up $1, you have made $500. So the following week, I bought 500 at $28, and then sold 500 at about $32. Made about $2,000. Sold them at I think around 6:30 in the morning, 6:45 in the morning, and I watched the price go up to about, if I recall, the $3,000, to $4,000, and then $5,000, and then $6,000. Oh my gosh, I just left about $3,000 or $4,000 on the table. and that frustrates you as an investor. However, it's actually a good problem to have. It's a good problem to have. So I said, okay, I think this market has more potential. We're at $32, it's top to 54. So it's either going to get to like 50, like 50-ish, or it's going to go to like 60 or 70. You don't know. But I'm thinking it's not going to go high to 54. I think it's kind of dying out. So the next day I did the same thing, and I bought at, or the end of the day I got it again, and then I planned to sell it the next day, and I said this time I'm going to hold on to this thing a little bit more. So I got back in at 35, and then I was able to actually sell it at 45, and that netted me over $5,000 in profit.
Oh my gosh, that's amazing. Now, Ken, as a day trader, that you have to have a special account, right? Because if you're just a regular investor, you can't buy and sell the next day, right? There's rules about that, right?
Yeah, that's actually. I'm glad you brought that up, because that's the most important. That is like a little. It's a scam. It's like a fence around the clubhouse that you need $25,000 in your account in order to have unlimited day trading. However, regardless of your account size, they give you 3 day trades a week. So you can actually day trade your account with any account, but you only get 3 of them a week. So if you use one on Monday, one on Tuesday, one on Wednesday, you have to wait till like maybe next Monday before you get another 3. It's a really stupid system, and you can move your account down to accounts, offshore accounts in the Bahamas. They'll charge you higher commissions. I don't really recommend that. But everyone in the business, even the brokers at TD Ameritrade, they feel for the young investor, and they know it's a bogus rule. It's not their rule. It's like some Board of Trade rule, which the brokers didn't come up with this rule, but they somewhat benefit by it because everyone has to have 25 grand. However, you can totally go over the day trading rule. I talked to them extensively because futures accounts, you can. I've had days where I do over 100 trades a day. So 3 a week, I'm like, what is this nonsense? And my account going from 10,000 to 20,000, it's still under that $25,000 threshold. And I want to mention all these Piedmont trades weren't actually day trades. What I did is I realized I need to save up my day trades. So I had like 2 or 3, but I specifically would buy Piedmont at the end of the session in the afternoon. A lot of people don't know this. Stocks go from 6:30 a.m. to 1 p.m., but then there's an extended session that goes to 5 p.m. Pacific Standard Time. And what happens is most people just quit after 1, so all the selling pressure, or buying pressure goes away, and the market slumps. Usually, it's totally normal for it to slump into like 4, 5 p.m. So I was picking up Piedmont at like 3 o'clock or 4 p.m. or one time I got it at like 4:56 p.m. and of the day before, and then I sold it the next day. So it actually didn't count as a day trade. And I think it's important for young investors. I would recommend completely ignoring the day trading rule. Day trade as much as you want. And if you go over the limit of day trading, get this, the first time it happens, all you do is call them and you say, hey, I went over, sorry, can you clear my account? Like, check a box or whatever you have to do. And they're like, yeah, no problem. They read you this little disclaimer that you're not supposed to do it. But they, I talked to them ahead of time because I was like, I know I'm going to go over that for you. And one of the brokers told me, he said, well, if you go over it, it doesn't matter how far you go. He's like, you could rack up 10, 20 trades in one day. Your account just gets flagged that you went over, and then the next day you can call in and get it unflagged.
Well, we don't want to encourage everyone to do this because also we have to do our disclaimer. We are not a licensed broker, so please remember that we are not licensed brokers. Please see your broker and your accountant. Yeah, we want them to stay in good standing with all of the investments and the law and everything.
Well, actually, Marilyn, I'm glad you brought that up because this is actually in good standing. It turns out that every broker gives you 3 flags that can be removed for every 12-month period because they know it's a silly rule. So they give you it's like a grace period. And the first time you do it, they even let you trade that very same day. Now, if you do it again, they can wait 1 day, and then if you do it again, they make you wait that 1 day, but they let you do it. And they have a system for it because they know people are going to make mistakes, they're going to get excited, or you're going to take profit, or you're just going to lose count. So it's not even breaking the law or anything. Now, if you do more than 3 times, then they will put you on a probation of 90 days. And so it's not bad. However, none of the Piedmont trades that I did, and a lot of my Tesla trades weren't day trades, but I'm buying and selling the next day or whatever. But the day trading rule shouldn't scare people away because you can actually, if you go over, you can just say sorry, and they say, here you go, have fun.
Yeah. So this is because everyone, Ken is a natural math wizard. He studied engineering, mathematics, and quantum physics at the United States Naval Academy in Annapolis, Maryland, a part of a special program. And then he also had an acting scholarship at the University of Oxford in the United Kingdom. And then after he graduated with a BFA in acting from Howard University in Washington, D.C. So he's very, very smart. And he also has this program called Quantum Field Investment. So he's going to offer that to our listeners. And so I'm going to let Ken talk about that real quick before, so Quantum Field Investment is a program that Ken has where he's finding great success that he's going to be offering. So Ken, can you tell us about that?
Sure. Basically, over the years of investing, I put together a system to trade the market, a set of rules and guidelines that really investing in common sense. If you stick to your rules, you will make profits. When you get your ego goes out of control, you can get in trouble. So I had a set of rules, and then I started my thing called Ken's Notebook, where all my winning trades, I do a screenshot of them. I kind of put them together in a one-page format where I can look at it, and I can glean information. Sometimes I put tips on there. But I line them up on my desk, and that kind of gives me the courage and the ability to kind of jump in there again and do it over and over and over again. Because in the beginning, sometimes I would make, a few $100s one day, and then I wake up the next morning and I'm like, how did I even do that? Like, what did I do? How long was that trade? And after a while, you start with it. You can analyze these trades. You can get a rhythm of it. So I put together this thing, and I realized that with the pandemic, I had more time to focus, and it's been a little bit more fun. But I put together Ken's Notebook, which are all the winning trades, and I realized that, this is the crystal ball of trading. I wish somebody, could show this to me. So part of Quantum Field Investment is, there's 3 parts. You get Ken's Notebook, which is the notebook of all my winning trades. So I've actually had people, I told them, you might have to change the price. Some people just use the exact same prices and repeated the trade, which I think is funny. But you also get my charting notebook, which is how to identify charts and patterns. And that's really the key. You have to look at a chart, or you should look at a chart, and everything that happens is represented in the chart. There's patterns, there's triangles, there's tenants, there's flags. And once you start to see these patterns, you kind of know what the markets are doing. It's not about, Tesla doesn't go up because cars are being bought and sold. The stock goes up because of buying pressure and selling pressure, which is often news related. And, it's important to understand these things. So charting is the key. You get my notebook, then you get the sheet off of me, and then you get the auto post system, which is when you're in the trade, and like whether you're buying, whether you're liquidating, you know, and where your head needs to be. Because as adults, we can just get in our own ways because we think we have everything figured out. So I've put it together so I don't make mistakes. And I realized that, wow, this is huge. And people start using it and they're having great results. So I feel like, you know, this is great. I'm going to go ahead and, you know, share this. And it's exciting. It's exciting because it's about the friendly camaraderie and competition to making money. That's kind of a solitary thing to make money, you know, all alone in your house, sitting in your underwear in the wee hours of the morning. You know, this is a little bit more fun.
And you can get that so you can get that. Moguls is going to give you the second year free for our listeners, and the code word is money, and that's at his website www.ken Bahn, B as in boy, A as in apple, H as in house, N as in Nancy.com. So that's www.kenbahn.com. And Ken has been doing he's the host of Driving Me Wild, and he's a terrific magician. So Ken uses the power of quantum physics, and it will blow your mind. He has a deck of cards. He carries a pack around with him, and he says life can be magical, but it's up to you believe. So you can check him out. He performs at the Magic Castle if you come up to Los Angeles. And we, you know, if you want to learn more or find out what Ken's doing, do go to his website, www.kenbahn.com, and check out the links in our podcast summary. And we really want to thank you, Ken, for joining us today on the show.
It's been a real pleasure. I'm really excited. When you guys go to my website, kenbahn.com, click on Ken's Club, and that's my investing club. So click on Ken's Club, and the password is money. And if you forget that password, I'm let's just say I'm counting on you to remember that password, and I know you will because the team is Get Rich. So let's do it together.
Yeah, so happy Thanksgiving, everybody, and thank you for supporting the show, and thank you for tuning in. We'll see you next week.